Hello, everybody. My name is Lee Schwartz, and I'd like to welcome you to our virtual business discussion today. Today's topic is PPP and your loan forgiveness options. Now, I noticed a lot of familiar names on the attendee list. I know a lot of you have been a part of our past webinars, and we're excited to continue bringing you this important information. We'll jump in here in a sec, but a couple of quick housekeeping items. If you have a question during the webinar, open up the chat function in Zoom and submit your question to all panelists. We are going to leave plenty of time at the end for Q&A. Now, you won't be able to see the questions that other people type in, but I can assure you, based on the way these other webinars have gone, we're going to be getting plenty. So I'm going to do my best to kind of aggregate those questions so that we're not doing too much repetition. Also, we're recording this webinar today. You will receive an email with the link to a survey, as well as our SVA resource page where the webinar recording will be available. Now, many of you are already clients of SVA, and we'd encourage you to reach out either to your SVA contact or to our speakers if you have questions coming out of this. I'd also encourage you to share our contact details with other business contacts who could use our help. We are finding that there are a lot of organizations who aren't getting timely or knowledgeable advice from their CPAs or their advisors, and we're happy to help. Now, if you're not a client and you have questions, please reach out to me, and I'll be happy to get you connected to a subject matter expert at SVA who can help. Now, I know there's a lot of anxiety around forgiveness of the PPP loan, so we're going to focus today on updating you on the current status, how to track the funds, and ultimately how to apply for forgiveness. If you've attended any of our past PPP webinars, you're already familiar with Nancy Melberg, but for you first timers, Nancy is a principal and leads our Management Advisory Services group. I'd also like to introduce Jenna Minton. Jenna's a senior accountant and has been a member of our PPP loan task force since we began it back in the spring. So I'll be back for the Q&A, but Nancy, I'm going to let you take it from here.
Thanks, Lee, and good afternoon, everyone. So I think for those of you that have probably logged into these webinars before, I like to call this my PPP book club. So I welcome everybody that's new to the PPP book club. I know we haven't met in a while, so we have some information to cover. I want to kind of break this down, like Lee said, into 3 sections. I'm going to talk a little bit about some of the facts, the things that we already know. We're going to talk about some of the new developments or newer developments and some of the clarification that's come out. And then we're going to go over some frequently asked questions that we get, and then we're going to open it up to all of our chat. So before we go any further, I wanted to lighten it up a little bit with the joke here. I think we probably have a lot of accountants on the line or finance people. So I'm going to give you a minute to read this and hopefully it brings a smile to your face. So if everybody's read this, I just want to say that not all accountants are boring. I think some of us can be fun. So I just thought this was cute and I wanted to lighten it up. I know there's a lot of uncertainty going on right now in the world with business, with illness, and just wanted people to smile. So let's jump into it. So the first section, like I said, I'm going to cover some of the things that we know, the facts. The first one is, and again, I'm sure everybody knows this, is that the SBA had extended the deadline for the covered period to 24 weeks. So in the original application process, we had an 8-week covered period and we had an 8-week alternative covered period. They have now extended that to a 24-week period. Anyone who received their loan prior to June 5th can elect the covered period that they want to use. Why is this important? This could be important because of the FTE calculations. Because I think people probably remember on the application, there was an ability, a safe harbor election to restore your FTEs or to keep your FTEs at a level that they were in the look back period. And we're going to cover the FTE calculation a little bit later. But this is important because some people planned in the beginning to purposely spend all of their funds within that 8-week period and make sure that they maintain their FTEs. We later realized that that could be extended, but for people who had laid employees off after the 8 weeks, they still had some ability to bring them on. But I just want to make sure that people understand that there was this alternative 24-week period that they could use. I'm happy to say that the SBA is now actively accepting applications. The timing right now is the bank has 60 days to submit the application to the SBA. So once you either go online onto the bank's portal, or if you're filling out a paper application, once you submit that information to the bank has 60 days to review it before they send it on to the SBA. Once the SBA receives the application, they then have 90 days to make the determination if the forgiveness is accepted. So you're really looking at a 5-month timeline. And we're going to get into when we think people should send in their application a little bit later, but these are just the facts that there is a 5-month timeline right now. Don't know that it's going to take that long, but this is the regulations right now. We also know that the loans must remain on your business's books as a liability until it's approved by the SBA. We are also going to talk a little bit later on why that could be important if you're in the process of selling your company. But as of now, that loan is going to sit on your books as a liability until the time you receive the forgiveness notification. And then we're going to decide if it's moved from a liability to income or a reduction of the expenses.
So going off of the reduction of the expenses, currently there is no change on the taxability of the PPP proceeds. And what this means is that the expenses that the PPP funds were used for will remain non-deductible. There's also no current guidance on what year this will be effective, whether it's 2020 or 2021. Current legislation is trying to correct this, but at this time, no progress has been made. And we believe that after the election, we may start to see some more activity on correcting this. Now, with regards to the EIDL grants, these will reduce the total PPP forgiveness amount. This is only the grant portion, so that was only $1,000 per employee with a max of $10,000. I mean, currently on the application, there's nowhere to put this amount for the EIDL in the calculation area. So what you should do is list it at the top of the application where it specifically asks for the amount, and then we believe the bankers are adjusting for this when they compute and approve your forgiveness amount.
So one of the things I want to bring up, if we could just go back for a second, one of the things that I want to mention is when we talk about there's no guidance on when that loan forgiveness, the taxability of it, how that will affect someone's tax return. So I want to just clarify that. So most companies are in the process of filling out applications right now. They've used those expenses, they've deducted that payroll. So they're going to have a payroll expense on their books or on their tax return for 2021. Now let's assume that, or for 2020, I'm sorry. Now let's fast forward to 2021 and let's say that we find out that that loan is forgiven and you cannot deduct those expenses. At this time, we are not 100% sure how that's going to be handled. If an individual is going to need to amend their 2020 tax return and reduce the expenses, or if an individual will just pick that up as a debt forgiveness income in 2021. There's been a lot of opinions on it both ways, but nothing has been formalized yet. So we're just going to have to wait and see how that plays out. So I think the point is here, it's very, very important as you're doing tax planning to keep that in mind, because it's very possible that you will see an increase in income due to this PPP in the event they don't reverse this legislation. So the other thing that we know at this point is that the SBA is going to be auditing any loans over $2 million. We don't know how or when that process will begin. I am told that this could be a very long process, that there are quite a few applications of funds that people have received for over $2 million. And as we all know that they're a little bit behind in processing some of that. So we're not sure. This could actually happen years down the line. So it's important to just be aware of that. I think the biggest importance in the auditing of the loans over 2 million is, again, the documentation as to the necessity of the loan. We do have some memos that we can provide to clients to help you document. I think the numbers are the numbers. So I think when people, crank out the applications, they're going to have solid numbers to substantiate that. So I'm not concerned about that in an audit. So I think what people need to be aware of is this necessity that still hangs out there. The other thing that I did want to clarify here is on the application, specifically the 3508, I'm not sure if they've corrected the other applications, but in the upper right-hand corner, it says expiration date 10/31. That is just the expiration date of that particular printed application. That is not when the applications are due. The applications are still 10 months after the end of your covered period. So you're going to calculate out your 8 weeks or your 12 weeks, and then you have 10 months from the end of that period. I did read actually in the most recent frequently asked questions that the SBA is going to be reprinting those applications with new dates on it, as I suspect they're getting as many calls on that as we are. The other thing that I think is fact at this point is that most clients are going to see a significant portion in their loan forgiven due to the way the application is written. I think in the beginning, we were a little cautious because it appeared that any reduction in FTEs or reduction in wage was going to decrease the amount of the loan. But we are certain now that it actually decreases the amount of the spend. So if you've spent payroll over 24 weeks, you're going to calculate any reductions, and then you're going to reduce it from your spend. And then you're going to look at the lower number, either your PPP loan or the reduced spend, and that's going to be the amount that's going to be forgiven. In most cases, most borrowers are going to be able to ignore all the other costs, such as the rent and the utilities, if they carry this out 24 weeks. Because think about it, you received your loan for a two and a half month period, or let's say 10 weeks, that's how they based it. And you've now had 24 weeks to spend the money. Even if you had a reduction in FTEs of 25%, more than likely you have spent at least that much money that you will see 100% forgiven, less any grant on the EIDL that Jenna mentioned earlier.
So recently, the 3508S form was released, and this form is available to any clients with loans $50,000 or less. It is a very simplified form of the forgiveness application. You do not need a lot of information on it. It's mainly just certifications, and the form does not show the calculations for payroll or the forgiveness calculation that the other forms show. Also, what was released was the clarification of rent paid to a related party. So rent expense that has been paid to a related party cannot be more than the mortgage interest on the loan for the building on the related party's books. Meaning our rent expense that we paid, we cannot pick up that full amount on our forgiveness application.
But remember, if you planned it out right, it's very possible that you wouldn't even need that.
Right. Okay, Jenna and Nancy, thank you for that quick overview of some of the changes and some of the things to think about. Now, I want to let everybody know, again, open up the chat box at the bottom of Zoom, submit your question to all panelists. We've already seen some come through, but there are a bunch of questions that we've been getting in the weeks running into up to this. So we actually have already put together a few. So why don't we just start with some of the commonly asked questions, the FAQs. And if you're choosing the 24-week covered period, do I need to wait the full 24 weeks before applying?
The answer is no, you do not. So you can apply at any point that you have spent all the funds. However, we recommend for all clients that you wait till you've spent at least 125 to 150% of the proceeds. This is just in the event that you do have some reduction in your FTEs, that you're covering the full amount, because our goal is to see every client receive 100% of this loan forgiven. And so this seems to be a pretty good strategic plan that seems to be working out. I do see most people between 18 and 20 weeks spending all this. So I highly suggest getting applications in right now. I do think that the SBA is going to get really, really busy with processing these as well as the banks. So to the extent you have already spent your money, I highly encourage you starting the application process now.
And Nancy, are all the banks accepting these already, or only some? Do you have an update on that?
I do think most banks are now accepting them. I do think just as in the original application process, some got on board a little bit slower and it took them a little bit longer. Most banks are now accepting it. Most banks also have an online portal that's allowing you to really go through the application online. And actually, I'm going to let Jenna comment on that because Jenna has probably processed several applications at this point. So you can process them online and upload your documents right to the bank's portal. So Jenna, I don't know if you want to add anything to that.
Yeah, I would suggest checking with your banker. A lot of bankers are even letting you submit a PDF and uploading it to the portal that way, while others are making you log into the portal and re-enter everything. But I would suggest checking with your banker because it depends on the bank.
All right, getting back to our FAQs, I know we get a lot of questions still on how to calculate an FTE. Do you guys want to cover that?
Yes, that's actually one of, I think, the main questions we are getting. So how do you calculate an FTE? You will take the number of hours they worked, divide it by 40, and then you're going to average it over the week. So going back to how Nancy was saying, if you're using your funds 18 to 20 weeks, you want to make sure you're using the number of weeks as your average. You don't want to be using 20 weeks of payroll costs and then averaging that over 24 weeks. Another important thing to look out for is if you have full-time employees, but they're working overtime, it's easy to run this calculation and get like a 1.2 employee. Well, no one can be over 1, so you want to make sure you're capping that.
Great. Okay, next question. Can I include an S Corp owner or employee's health insurance and retirement plan contribution?
Yeah, we do get this question quite a bit as well. So employee owners are going to be capped based on a 24-week period of the $20,833. And the way we're getting that number is you're going to take the $100,000 annual cap, divide that by 12, and then you're going to multiply that by 2.5, because that's basically what received the original application on, which was the 10 weeks or the 2.5 months of an annualized $100,000 salary. That's what they're capped at. If you choose to use the 8-week covered period, you're going to be capped at the $15,385. So this is where this becomes important to, again, be strategic on what period you're using. Now, as far as S Corp, if you are a shareholder in an S Corp, the health insurance cannot be an additional expense. That has to be included in that cap of $20,833. That is not the case if you are an employee of a C corporation. This is for S corporations. However, for both S Corp and C Corp owners, you can include any contributions to a 401k or a similar retirement plan as long as they've been paid and incurred within the covered period. So if you have a match to a 401k, that can certainly be included. If it's a profit sharing plan, the expense has to be incurred and paid within that covered period. Again, whether you're choosing 8 or 24 weeks.
Great, thank you for that. I know we have a lot of questions coming in on what role the benefits play in all this. Moving on to our next question, what form should a sole proprietor, an IC or SC individual use if they have no employees?
Yep, so this is going to be kind of a 2-step process. The first thing you're going to look at is, do you have any employees? If no, so you have no employees, you're going to use either the EZ or the 3508S. Then you look at to see, was your loan under 50,000? If yes, you're going to use the 3508S. If it was more than 50,000, you're going to use the 3508 EZ.
Okay, can an employer have both a wage reduction and an FTE reduction for the same individual?
Okay, so here's where it's going to get a little bit technical for the next couple of minutes. So everybody bear with me here. I think this FTE calculation gets very complicated for people. So first of all, to address this question, Lee, you cannot take the same person and apply the wage reduction and the FTE reduction if it's just because that person no longer works here or their hours were reduced, maybe from 30 hours to 35 hours. So let's think about that for a minute. What does that mean? You have an individual who worked 35 hours and now they're working 30 hours. Well, obviously their gross pay is going to be reduced. Well, that particular calculation is going to come into play when you're calculating the FTE reduction. So for the wage, the 25% wage reduction on an employee is really looking at an hourly pay or salary, breaking the salary down based on, a particular week. So we're going to break that salary down. So if you had an hourly individual that you reduced their hours from 40 hours to 30 hours, but you also reduce their pay from $15 an hour to $10 an hour, then it's possible you're going to get this reduction in both places. But you will not take the reduction in both places if their pay is less just because you're reducing their hours. So hopefully I didn't lose anyone on that. Now, how do we calculate the FTEs and what dates should I be looking at? Oh, Lee, I think you were supposed to ask.
No, go for it. We've got
I got so excited, I jumped right in.
Go for it.
Okay, so there's several different dates that you need to take a look at. And people get this a little bit confused because there are so many different dates. So the first thing we want to do is we want to determine in any application if someone can use the safe harbor FTE, safe harbor count. So what they're going to do is they're going to look at their FTEs from 2/15/20 to 4/26/20. So you're going to take any payrolls within that time period and you're going to calculate using the method that Jenna explained earlier to calculate what your FTE count was. You are then going to take the payroll that includes 2/15 only. That's one pay period. Whatever your pay period is that includes 2/15, you're going to take that payroll and you're going to do, again, the same calculation Jenna talked about to determine your average number of FTEs. You are then going to compare that second number to the first number. If the second number is greater, we're going to jump on to number 4. However, if number 2 is less, you don't meet the safe harbor and you can just stop right there. You're going to have to calculate any potential reduction using, I keep calling it the look back period, they call it the reference period. So if you hear it referred to as reference period, it's that period in 2019 that you're going to look at. However, if that number is higher, then what you can do is then you can say, what are the total applications the total FTEs as of today, the date of the application, if I'm filling the application out now, or 12/31. So I want to emphasize it's the earlier of, because many people were thinking they had to wait till 12/31 to restore their FTEs. That is not correct. They can do it when they're filling out the application. If that number is equal to or greater than, then they have restored their they've restored their FTEs, they meet the safe harbor, they can put a 1 in that calculation on the application and move forward. I want to explain a little bit about why this is, because it might help people understand if they think about the logic behind it. And I think the logic behind it is because at 2/15/2020, most businesses out there were operating at their normal capacity, full capacity, or whatever they considered full capacity. COVID didn't really hit for us until later on, the end of February, beginning of March, when the CDC came out and we had guidelines that said that people had to shut down or reduce. Stay-at-home order, that's when the stay-at-home order was signed. I believe it might have even been like February 16th. So their assumption is that between February 16th or February 15th and April 26th, your FTEs were reduced, which means you were hit by COVID, you were affected by COVID. If your FTEs went up in that time period, then COVID probably had no impact on your business and they're not going to allow you to use the safe harbor. So that's the reason behind that. The other thing I want to point out is that if you were one of those businesses where they said you can only operate at 25% capacity, retail establishments needed to shut down, then you automatically can use a safe harbor. So you have to be one of those businesses that, due to compliance reasons by the CDC, the Secretary of Health and Human Services, or OSHA, any of those said you have to shut down or operate at minimum capacity, you automatically meet the safe harbor requirements and you don't even need to go through this calculation. So that's the first calculation, the safe harbor. So now what we're going to take a look at is if you don't meet the safe harbor, then what do? Well, then you're going to have to take your total FTEs, again, using that average Jenna talked about, over one of these two time periods, either 2/15/19 to 6/30/19. So last year, basically you're going to look at what were my FTEs last year in this time period, or you're going to look at what were my FTEs from January 1st to February 29, 2020. So this is going to be for those new businesses who weren't in operation then, or if there was some reason why you had a lower number, you would want to use that number, because again, the thought process is you were probably pretty operating at full capacity in that time period. So those are going to be the two reference periods you can use. You are then going to take your FTEs during your covered period, your 8 weeks or your 24 weeks, and you're going to divide that by that reference period above. You're going to enter that number. So that number is either going to be something like 0.80, or it's going to be something like 1 or greater. So this is how you calculate if there's a reduction in FTEs. And again, I think this is really important to emphasize that even if you had a reduction, you could still see 100% of forgiveness, because if you spent a lot more than your loan was, let's say your loan was $800,000, you spent 1.5, you had a reduction. Well, even if you reduce that 1.5 by 20%, you're still higher than your $800,000 loan. So you still have to go through this calculation, but I don't want people to get really hung up on it or get really nervous about it, because I think that it really does produce a positive result for most people at the end of the application. And again, Jenna has been critical in processing a lot of applications in our firm, and I'm sure she's probably going to tell you that she's seeing a lot of them being, a significant portion of that loan being forgiven, if not all of it.
Yeah, I agree with that. And I just want to triple clarify on these. The calculation is the FTE calculation. It's not just number of employees. I think that's kind of what has been tripping people up. Just make sure you do that calculation.
Okay, Nancy and Jenna, great information. We're almost at a half an hour already. I want to assure everybody, a ton of questions are coming in. We are here. So here's what we're going to do. For those of you who only had a half an hour blocked off, feel free to reach out to us. We're happy to answer questions on an ad hoc basis if you have any. You'll also be getting the full recording via email that you can watch later. But what we're going to do is we're going to hang on and we're going to go through a bunch more Q&A, because we've had a ton of questions come through. So for those of you who have to jump, thank you for joining us. Please make sure to watch the rest of the webinar. But we're going to dive right back in here.
One thing, Lee, real quick before people start to jump off, I do want to just say that SVA does have a team of people put together that is more than willing, able to process those applications for people. So if anybody, is still having some anxiety over this application, absolutely reach out to us. We are getting really good at it. We're processing a lot of them, and we kind of know what to look for, what questions to ask, where there might be some risk, if there is any. But again, if anybody needs help, highly encourage them to reach out to us. Even if you fill out your own application and you want us to review it, we're more than happy to take a quick look at it.
Yeah, and again, this has been our goal throughout this whole thing, is to make sure that obviously our clients, but really the entire business community, is taken care of. This is a as you mentioned, a time of a lot of anxiety, and if we can help ease some of that, we are happy to do so. But let's dive right back in. We still have several hundred people on. One of the things you touched on earlier, Nancy, and then we've had a couple of questions coming in about potentially selling a business before the loan forgiveness is completed. That was one question, that just really talking about the loan remaining on the books as a liability for an owner looking to sell.
Yeah, so this again gets a little bit complicated and every situation is going to be different. However, the SBA has come out with some clarification that you do need some type of approval. So you do need to notify the SBA if you are in the process of getting an application forgiven. If you have not applied for an application yet, you are in the process of selling your business. They need to be notified of that information. The other reason why this does become really important for people is as that liability sits on the books, and again, most companies are going to see 100% forgiveness. The problem is if you're getting lending from a bank, it could possibly be messing up your leverage calculation, and the bank could deny the loan because that liability is sitting on the books, even though we think that that liability is going to be forgiven. So I would encourage anybody that is in the process of it, is thinking about it, get your application in. We really want to get that liability off the books prior to a sale going through. But regardless, you will still have to notify the SBA and document what the situation is with them.
There was a question that came through in regards to the RDE tax credit. When you're calculating the forgiveness, the question is, am I allowed to count the employees as FTEs, but not their wages? That makes sense?
I would have to look into that. I don't think, I'm not sure that that's going to impact the application process at all.
Okay.
Yeah, I didn't look into that.
One of the questions that came through, can you explain the FTE reduction safe harbor paragraph? Most of our customers, which are restaurants and coffee shops, were closed or at reduced density because of the CDC rules. Does this qualify us for the exception?
Yes, I would say it does. They definitely would be one of those organizations that were following guidance by the CDC, public health and safety. So yes, I would say they could check that box. I think it's going to really apply to people like restaurants, bar owners, hair salons, nail salons. I think there were some possible medical spas that were affected by it. I think dentists to a certain extent were affected by it. So yes, there's going to be quite a few of those service related industries and retail. But absolutely restaurants and bars were probably the biggest ones that this was probably geared towards.
Under the 8-week rules, this is a question, we were using loan proceeds for payroll and non-payroll covered expenses. Since the switch to 24 weeks, we've decided to only report covered payroll expenses. Is there a risk of the SBA seeing the use for covered non-payroll expenses as improper if we only report payroll expenses?
Jenna, you want to take this one?
Yeah, can you say that one again, Lee? You lost me.
Sure. Under the 8-week rules, we were using loan proceeds for payroll and non-payroll covered expenses. Since the switch to 24 weeks, we've decided to only report covered payroll expenses. Is there a risk of the SBA seeing the use for covered non-payroll expenses as improper if we only report payroll expenses?
No, I don't think so, because you're saying how many you're using your funds for payroll expenses. You have more than enough in the payroll expense.
For some reason, Jenna, your volume is cutting in and out. I don't know if it's happening to everyone, but yeah, you're fading out. What Jenna's saying, I believe. No, the answer is no, that shouldn't affect it. I don't think they're going to be tracing dollars. I know that early on, some banks were encouraging clients to put those funds in a separate bank account, transfer the money over as they used it. But I don't think the SBA has any intention of tracing dollar for dollar. I think as long as you use those expenses on qualified expenses, which would be, then I don't see any problem whatsoever in that and zero risk in that.
All right, I know this question is from a restaurant, owner of several restaurants. Do we need to calculate FTEs even though the safe harbor for not being allowed, even though the safe harbor for not being allowed to operate normal business based on state restrictions will apply?
No.
Okay.
No, they can put a 1 in there. So on the application, there's a spot where you're going to either put your reduction or you're going to put a 1 in there. They're going to put a 1 in there because they meet that safe harbor requirement.
How would you recommend counting the FTEs for occasional employees? Is it best to ignore them altogether or count them as part-time?
You need to count all employees in your FTE calculation. And again, if they were part-time or occasional employees, you probably had some in your look back period as well. But you definitely need to count all employees. And the other thing that I want to point out that I didn't mention before is there's actually a simplified method to calculating the FTEs. So the method that I described earlier is the actual method where you divide it by 40 to get the percent. There's a simplified method that says anybody that works 40 hours is a 1. Anybody that works under 40 hours is a half, a 0.5. And you don't have to do all the other fancy calculations. They're either a 1 or a 5. If anybody's concerned about FTE reduction, I would encourage people to calculate it both ways and use whichever one produces the better output.
All right, Nancy, here will be a fun one for you. I'm going to have you put on your Nostradamus hat. What do you think an audit will look like for a company with greater than $2 million loan? What will they look at in terms of necessity? Will they be looking at balance sheet data?
I think they're going to look at everything. Again, this is just my interpretation. We do have a memo that we have provided people with some points to document. I think they're going to look at balance sheet, but I also think that they're going to look at what factors were in place that made the company believe that this was a necessity for them. Because remember, in the original application, it was very vague, and it said that if basically there was some language that if you weren't sure what was going to happen in the future, and I think that was the case for everyone, nobody really knew how long this was going to last, where this was headed. So I think it's just going to be documenting your reasons. I do think it's important that you had a plan in place, that if you were concerned about it, who was going to be laid off, that you were looking at those things. I think that's kind of documentation that they're going to want to see. So I do think they're going to look at a balance sheet, but I don't think that that's going to be the sole decision that they're going to use in saying yes or no, you didn't have a necessity for this. They're going to really look at those factors that were possibly more non-financial factors, and maybe looking at just customers to pay slower. So I think these are all the things that people need to document. And if anybody does have any concerns, please feel free to reach out to me and I will send you the outline to that memo. It's pretty comprehensive and I think it covers everything. And I think as long as you have that filled out, I think that's going to be a great starting point to hand to the SBA. Because again, I think the numbers are the numbers. You took them off of payroll. I don't think that there's going to be any problem in auditing those numbers. It's going to be the, those items that were a little bit unknown at the time that we're going to be looking at. So I wish I had the perfect answer, but unfortunately I don't, but I think this memo is a good start.
Well, as long as you're predicting the future, Nancy, let's stay there and say,
Yeah.
Another question, will the idle grant deduction on the total PPP forgiveness stand or possibly change? The question is not sure if we should hold off with a possible change.
I don't think it will change. Jenna, do you have any thoughts on that? I think the EIDL loan was clearly a loan. The only portion of it that's non-forgivable was the advance or the grant. I have not heard anything in everything that I've read that that's a possibility that will be automatically, forgiven the EIDL or that will reduce the PPP.
Okay, I know you mentioned before that most banks are accepting applications at this time, but I know some larger ones haven't started just yet. One of the questions was, what if our bank is not accepting forgiveness loans at this time? What would your suggestion be to them?
I think you gotta wait. You have to apply through the bank that you took the loan out for. So I do think if the bank originally accepted applications, they will absolutely be taking forgiveness applications. They're just probably trying to get their online portal ready to make it easier. So unfortunately, those individuals are going to have to wait.
And Nancy, I know this is different for everybody. Another question we had is, has SBA provided any guidance on when the process for forgiveness will start? This person saying that their application has been at the SBA for about a month without any feedback.
I guess, first of all, how do they know it's been at the SBA for a month? Because the bank has 60 days before the bank has to send it in. So if the bank has given them some type of a confirmation that they have sent it in, then they can expect to wait 90 days from that point, from when it got to the SBA. It's going to be 90 days. But again, because the bank had a couple months, it could possibly be that the bank held it for a little bit too.
Okay, and I know from speaking with a banker just yesterday, this bank had submitted dozens and dozens to the SBA, and there two have been approved, but they were both loans under 100,000. That's just a one-off example, but maybe that's helpful as well. Is there any restrictions on which reference period you use when comparing FTEs?
Nope. They have their choice. Use the one that provides the lower number of FTEs. That would be my suggestion.
Should we be using the total payroll cost over the 24-week period, or just for the duration that expends the loan funds? So if we used up the loan funds in 12 weeks, do we enter the total at that point, or the payroll dollars covering the whole 24 weeks?
Jenna, you want to try to grab this one? Let's see if we can hear you.
Yeah, is my audio okay now?
Yeah.
Okay. So I recommend using 125 to 150% of your PPP funds for payroll costs. So if that happens at 12 weeks and you don't have any FTE issues, then I would say go ahead and use that. But if you're trying to reinstate all your FTEs to get up to the one, then you would want to wait out. But there's no issue if you've used up all of your funds and then some to go ahead and apply early.
And we are losing you again, Jenna, but I think we caught the gist of that.
Yeah.
A great question that just came through. So what would be the downside to waiting to apply for forgiveness? It seems like waiting may clarify tax impact, or maybe we'll see newer or easier applications.
Yeah, that's a great question. I think the only downside is the unknown and that you're waiting. Again, if you're selling your business or contemplating selling your business, that could be problematic. In that situation, I do think you want to get the application in and get that loan off your books so it doesn't affect anything in the calculations. However, if you're not selling your business, I think it's just timing. I do think for people that are filling out applications now, and that even if we get notification from the SBA, let's say we get notification on January 5th that the loan is forgiven, we still might not want to file a tax return for 2020 for the business. We might want to hold off to see if we get some guidance on the deductibility of it from a tax perspective. So I do think that it's possible we could be extending some tax returns. I'm very hopeful that we will have further guidance in the early part of 2021. I do not think we're going to know anything until after the election. And even then, it's going to take a little bit of time. And I think we need to see what happens with the Senate and the House. But I definitely think that we might not have that answer until early 2021 or even into spring of 2021. So I think it gives people peace of mind that the loan is forgiven, but from a taxability perspective, we might want to hold off anyway. So really no harm in waiting. If you're okay and you're confident your number is going to be forgiven, no harm whatsoever.
Okay, great. Yeah, I think that's really helpful. Another question, we're seasonal, therefore our FTE were lower on February 15th, but we ramped up in April as we always do. Is there another look back period for seasonal?
Jenna, do you happen to know off the top of your head? There is. I'd have to look it up real quick. I don't deal with a lot of seasonal employees, so I'm not sure off the top of my head what that number is. But there is. Let me see if I have that handy. You can go on to the next question and I'll.
All right, while you look that up, prior guidance or rumors indicated that PPP loans less than 150,000 may be automatically forgiven. Is that no longer the case?
So what I have heard is that I have heard that this 3508S, the loans 50,000 and under, being somewhat automatically forgiven was the replacement to the possibility of 150. That $150,000 bill that was put in back on June 30th, I think, of 2020, has not had any movement whatsoever. There's been no more discussion on it. And again, I did read that this 50,000 was kind of, this was what they felt was fair. 150,000 was too high. They moved to a 50,000 and this is kind of replacing that. So I wouldn't hold off and wait for that.
Okay, is it still true that you can submit salary expenses that were either paid or incurred during the covered period?
Jenna, let's try you one more time, your audio.
Lee, can you please give me that question one more time?
I think I may have lost it. It was about can you base your loan amount on salary incurred or there we go. Submit salary expenses that were either paid or incurred during the covered period. Can you choose which one?
Yep, so that also goes back to choosing like an alternative period. So there's very specific guidelines for anyone who is a monthly payroll or a or they pay it twice a month. You can choose to accrue your payroll and include it in that. Anyone who pays on a weekly basis or a bi-weekly basis, that's usually the payroll that was paid within your covered period. Is my audio okay?
It's
Keep going, we're getting the gist.
Okay. But that's where this alternative covered period also comes into play. So if you are a weekly payroll, pay out weekly, you can choose to start your covered period on that next pay date after you got your loan, instead of covered period starting on the date of disbursement.
Okay, so we do have some more questions coming in. They're getting a little bit more specific. We're also coming close to about 50 minutes here. So I think why don't we start wrapping it up? Sorry for those for the couple of the minor technical issues that we have here. If you do have additional questions, as we said, if you're a client, please reach out to Nancy, Jenna, or your SVA contact. We are happy to help. If you're not a client, please reach out to me. I will make sure we get you the question or the answers that you need. Again, we know there's a lot of anxiety around this, and we are happy to help.
and I'll get the seasonal look back reference period dates.
Okay, great. So, you know, we appreciate you all jumping on today. Glad we had a chance to spend some extra time and answer some questions. I do want to remind everybody, we do have another webinar coming up. It's a little over a month away on December 1st. A topic for that is going to be post-election year-end tax planning. Nancy, I didn't put you on the spot and make you predict who's going to win the election. So you should be lucky. You should be happy
No,
for
please,
that.
please don't do that.
No, I wouldn't. But please visit svaaccountants.com/back where that webinar and other webinars are listed. We appreciate you all jumping on today. Again, if you have additional questions, please reach out. Have a great rest of your day, and we hope to see you at our next webinar on December 1st. Bye-bye.
Bye.
Bye, thank you.